for enhancing financial inclusivity through microfinance. Also, ladies and gentlemen, this conference aims to discuss various aspects of the current ecosystem of microfinance, which are crucial for scaling sustainable finance initiatives and maximizing their impact on inclusive development. Initiatives like Lakpati Didi that drive micro enterprises, and many more such discussion points. We welcome all the stakeholders, microfinance industry leaders, policymakers, investors, sustainability experts, and other key stakeholders. Together, we will strategize on leveraging sustainable finance for inclusive growth and sustainable development, paving the path for a prosperous and a resilient future. With those words, ladies and gentlemen, I once again welcome everyone present in the hall to this wonderful conference, to this inaugural session of the conference. And may I now request you all to kindly join us as we now invite our honorable dignitaries on the dais. May I request ED and CEO Sa-Dhan, Mr. Jiji Mammen, to kindly escort our honorable chief guest and our guests to the dais. Ladies and gentlemen, may I request you all to kindly put your hands together as we welcome our honorable chief guest, IAS Secretary, DFS, Ministry of Finance, Government of India, Mr. Nagaraju. Warm welcome to you, sir. Good morning, sir. May we also request Chairman NABARD, Mr. K.V. Shaji, to kindly join us onto the stage. Good morning and warm welcome to you, sir. May I also invite CMD SIDBI, Mr. Manoj Mittal, to kindly join us onto the stage. We now invite ED RBI, Mr. Jayant Kumar Das, to kindly join us onto the stage. And may I also invite MD and CEO, ESAF, Small Finance Bank and Chairperson Sa-Dhan, Mr. K. Paul Thomas, to kindly join us onto the stage. Ladies and gentlemen, we could make this conference very lightning and energetic if we put our hands together and mark the beautiful beginning of this conference. In our Indian tradition, it is customary to begin any auspicious occasion with lighting the ceremonial lamp. May I request our honorable dignitaries on the dais to kindly light the ceremonial lamp and mark the beginning of this conference. Ladies and gentlemen, we will also play Saraswati Vandana, seeking God's blessing. And to let you all know, the diya, when it emits energy. And it is this very energy that surrounds the universe as a prayer. Each wick being lit is a prayer for global peace and solidarity. Thank you so much, dignitaries, for lighting the ceremonial lamp. Ladies and gentlemen, with that, we pray to the Almighty for a very successful conference and for the well-being of each and everybody around us. We would now like to welcome our dignitaries on the dais, and to do so, may I request the gracious ladies from the team Sa-Dhan to kindly present planters and welcome our honorable guest. May I request Ms. Kavita to kindly join us onto the stage and present a planter to our honorable chief guest, Secretary DFS, Ministry of Finance, Government of India, Shri Nagaraju. Very warm welcome to you, sir. Thank you so much for sparing some time from your busy schedule. We welcome you to this conference this morning. May I now request Ms. Anshika to come onto the stage and present a planter and welcome Chairman NABARD, Shri K.V. Shaji. We welcome you, sir. Thank you so much for joining us this morning. May I now invite Ms. Pratishtha to kindly join us onto the stage and present a planter to CMD SIDBI, Mr. Manoj Mittal, and welcome him to this conference. Warm welcome to you, sir. Thank you for joining us this morning. And may I now request Ms. Shamoshri to kindly join us onto the stage and present a planter to EDRBI, Mr. Jayant Kumar Das, and welcome him to this conference. Sir, thank you so much for joining us this morning. Thank you so much. Ladies and gentlemen, with that, we call this session to order and we begin with a welcome address. May I now request MD and CEO, ESAF, Small Finance Bank and Chairperson, Sa-Dhan, Mr. K. Paul Thomas, to kindly present the welcome address.
Thank you. Distinguished guests, members of Sa-Dhan, sponsors, speakers and participants, good morning everyone. I consider it as a privilege and honor in delivering the welcome address as Chairperson of Sa-Dhan. ESAF and I have been associated with the Sa-Dhan from its inception in 1998. So on behalf of Sa-Dhan and all our members, I extend a very warm welcome to our chief guest, Sri M. Nagaraju IAS, Secretary, Department of Financial Services, Ministry of Finance, Government of India. Our Honorable Finance Minister and the Ministry of Finance and DFS specifically have always recognized the contributions of microfinance institutions sector and supported the financial inclusion ecosystem in our country. Thank you, sir, for your support and presence in this August function. Thank you, sir. Sri Jayant Kumar Das, Executive Director of Reserve Bank of India, is attending this function. And we all know that RBI has been the guiding pillar as a regulator and supervisor of majority of Sa-Dhan members. Sri J.K. Das has been giving Sa-Dhan a lot of support, and whenever he is very accessible, and whenever we approach him as an SRO, he gives us time. So I extend a warm welcome to Sri Jayant Kumar Das, sir, to this inaugural ceremony. Sri Manoj Mittal, Chairman and Managing Director of SIDBI. So SIDBI played a very important role in developing the microfinance institutions in India. And Sri Manoj Mittal has been there in the forefront to support these institutions from the beginning. And he is known to many of the institutions personally. And all the Sa-Dhan members are really happy when he was appointed as the CMD of SIDBI. Thank you, sir. And on behalf, this is the first function you are attending, Sa-Dhan's function, as CMD of SIDBI. So on behalf of Sa-Dhan members, I congratulate you on becoming, assuming charge as the CMD of SIDBI, and look forward for your guidance and support. And I extend a warm welcome to you, sir. Sri Dr. K.V. Shaji, Chairman NABARD. Like SIDBI developed MFIs in the country, NABARD has been pioneer in piloting the self-help group movement and making it as a national movement in our country. So, of late, NABARD has identified MFIs also, MFI's contribution, and started refinance facility and all. And Sri Shaji, on his personal level also, has been very passionate in promoting financial inclusion. I have seen him as the chairman of Kerala Grameen Bank. Personally, what is a role he has played in financial inclusion in that part of our country. So thank you very much, sir, for making it possible. I extend a warm welcome to this function. Sri Jiji Mammen, under Jiji Mammen's Executive Director of Sa-Dhan, under his leadership, the Sa-Dhan Secretariat curated this program. And I'm happy to see that every year they have lined up very distinguished speakers. Around 78 speakers are attending this two-day annual conference, and various sessions. It is well organized. I'm happy to see under his leadership, Sa-Dhan is growing and scaling up its activities. Welcome, extend a warm welcome to Sri Jiji Mammen. So since 1998, Sa-Dhan has been in a mission of inclusive growth. And today, as an association, Sa-Dhan has about 220 members working in 33 states, union territories, and over 600 districts. Members include both for-profit and not-for-profit MFIs, SHG promoting institutions, banks, rating agencies, capacity building institutions, etc. Sa-Dhan's members with diverse legal forms and operating models reach out to approximately 44 million clients with loan outstanding of more than 1,27,800 crore. Financial inclusion ecosystem comprising NGOs, MFIs, NBFCs, NBFC MFIs, and banks have fueled a banking revolution in India. The last 25 years, in particular last 15 years, has seen it in India. Only 1 in every 3 were having a bank account in 2010. But today it is 77%, more than 3 in every 4. Topic of this year's national conference is driving sustainable development through inclusive finance. Financial inclusion has significantly contributed to Sustainable Development Goals, SDGs. SDGs came in 2015 as adopted by UN and India too as a signatory. However, Sa-Dhan and its members were engrossed in it already for decades by then. I don't think there is any other institutional segment that contributed to UN SDGs as much as the financial inclusion sector. Financial inclusion initiatives have made contributions to all 17 SDGs. Following can be listed particularly as one where significant impact has been made. SDG 1, no poverty. SDG 2, zero hunger. 3, good health and well-being. 4, quality education. 5, gender equality. 6, clean water and sanitation. 7, affordable and clean energy. 8, decent work and economic growth. I can go till SDG 17. So how our sector contributed to each SDGs. The theme for this conference is driving sustainable development through inclusive finance is not only our legacy, but also our call for the future. Sustainability through inclusivity. In conclusion, I would like to appreciate the efforts and directives given by the Government of India for inclusive development. The CSR mandate of 2%. Many of our Sa-Dhan member banks are spending more than 2%. Even in my bank, ESAF Small Finance Bank is also spending 5% of our profits for CSR. So BRSR, Business Responsibility and Sustainability Report for top 1,000 listed companies. SEBI's directives for ESG ratings, and some of the many steps to mainstream inclusivity. These are opportunities for all players in the financial inclusion space to learn and grow. I'm happy to share that this week, ESAF Small Finance Bank received its first ESG rating as a listed company by a SEBI-approved ESG rating agency. We scored 68.1 out of 100 against the industry average of 51.8 out of 100. So for those of us with ESG in our DNA, it was a natural recognition. So let us continue on to the legacy, contributing well to social and financial inclusion through business excellence. I once again extend a warm welcome to all the participants and all the speakers and all the members of Sa-Dhan to this two-day annual event of Sa-Dhan. Once again, thank you very much.
Thank you so much, sir, for that very warm note from you, and thank you so much for introducing the conference to all of us. Ladies and gentlemen, may we now invite ED RBI, Shri Jayant Kumar Das, to kindly give the special address.
Namaskar. Shri M. Nagaraju, Secretary DFS, Shri K.B. Shaji, Chairman NABARD, Shri Manoj, Mittal, CMD SIDBI, Mr. Paul Thomas, Chairman Sa-Dhan, and Mr. Jiji Mammen, CEO Sa-Dhan, distinguished speakers, panelists, participant, ladies and gentlemen. Just being in the midst of people who have made a difference to the society, albeit through a highest common factor called finance, is like being in a professional satsang for me. I take this moment to thank Sa-Dhan for the opportunity given to me. India, consistently generating global superlatives in many spaces, is well set to be the third largest economy and transition to a upper middle income category by 2030, if an annual average growth rate of 6.7% is realized. The Sustainable Development Goals, or what was called as SDGs 2030 of UN, that India strives to achieve too, comes to a punctuation mark during the same year, that is 2030. Half a decade to catch up. The conference theme assumes much more gravitas than buzzwords in the breeze. Financial inclusion and sustainable finance can be mutually leveraged to contribute to inclusive economic growth and the achievement of SDGs. While SDGs do not include access to credit as a goal per se, it has a direct effect on achieving some of the broader goals, such as ending poverty, improving health and education, reducing gender and racial inequality, etc. As per the economic survey, India has the second largest microfinance sector after China in terms of number of borrowers. Be it a pyramid, be it a temple or an economy, it is depth and breadth of its base that matters most for its stability. The macroeconomics of microfinance in different time horizons and rate scenarios have been a subject matter of academic debate. However, there is near consensus that direct and indirect welfare gains from microcredits are larger for the poor and the marginal entrepreneurs. That lends resilience to stability of the equilibrium in the economic system. Financial inclusion and institutional quality are positively associated with financial stability, while green growth, environmental sustainability, and renewable energy mechanisms are achieved through financial stability. I will attempt to give a few contemporary dimensions to the theme of today's conference by linking inclusive finance to sustainable development. Financial stability is essential for economic growth as it fosters confidence, trust, and promotes investment in green development. However, it's a dilemma for the world economies to create an equilibrium between financial stability and environmental sustainability. The shocks and risks associated with climate change affect the livelihoods and well-being of vulnerable individuals and households to a disproportionate extent, as they have the thinnest margins and the least access to resilient strategies that can help them avoid, absorb, or adapt to these shocks. A recent study of World Economic Forum concluded that both climate-induced crisis and rising temperature have a disproportionate impact on women. It's reported that about 85% of microfinance clients in India are women. Incidentally, the credit gap for women SHGs has slightly widened to 42.30% during FY23 as compared to 39.76 during FY22. Adaptation to climate change provides compelling grounds as to why renewed focus on outcomes or impacts matters, and more so when it comes to microfinance. A vision of financial inclusion 2.0 for India needs to emerge. It is likely to be characterized by augmented impact of inclusive and all-round financial services for low-income and vulnerable persons, households, and enterprises by imparting better resilience through financial buffers and sustainable green future. More specifically, it needs to move beyond just breadth or depth of financial inclusion and shift focus to maximizing the utility of financial inclusion. That would gradually render the term financial inclusion remodel itself into economic inclusion. Economic inclusion happens when people not only have their basic subsistence needs met, but also are productive, fulfilled, and fully empowered to make choices about their lives with improved productivity. Done right, the three goals of sustainability, inclusion, and growth can be self-reinforcing triad. The need for specialized institutions and skills for microfinance is underpinned in Indian experience. During last three fiscals, the market shares of commercial banks have shrunk from 44% to 32% as in March 24. This share was captured by NBFC MFIs rising from 32 to 40%, while NBFC ICC is rising from 7 to 11%, 4% each. The share of SFBs and not-for-profit MFIs remains sticky around 17%. During last 3-year period, out of 24 applicants for registration as NBFC MFIs, of 13 who made the cut, 8 were new entities and 5 were cases of conversions from NBFC ICCs. It is said that the heart of India lies in the rural areas, and so is the economic engine of India. By bringing about financial inclusion, women empowerment, and digital inclusion, microfinance will play a mighty role in India's emergence. For a fact, people in rural areas faces relatively higher rates of financial exclusion. By design, long-term customer retention by MFIs is an anachronism, unlike in any other business. In a way, the role of MFIs is to act as pulmonary vents that carry the financially unserved or underserved, oxygenate it with finance, and deliver it to the mainstream formal economy of the value chain. The micro borrowers, depending on their base state, render themselves ineligible for repetitive microcredits depending upon the net margin from their income-generating activities. Sticky featuring of the same micro borrower in the segment data would ideally put a question mark on the impact that is intended to be delivered by MFIs. The industry SROs have an analytical role to play here. Incidentally, the rural client outreach of MFIs, which was 74% in June 2021, has slipped to 72% in June 24, thanks to increased market share of NBFC ICCs. Reserve Bank in January 2020 released the National Strategy for Financial Inclusion with focus on 6 strategic objectives for 5 years period ending 2024. The contribution of microfinance in its fulfillment have been noteworthy. Let me touch upon some typical regulatory traction points. The current regulatory cap of 3 lakh rupees as annual household income to qualify as microfinance borrower stacks well with the outcome of NABARD All India Rural Financial Inclusion Survey for 2021-22, which puts the average annual income of households at 1.52 lakh. Fast clip progress in access to bank accounts or payment infrastructure often mask gaps in financial inclusion. Mobile phone inclusion has not been fully translated into financial inclusion. Despite substantial progress in poverty reduction and financial inclusion in India, the pacing wedge between the forward and target segments is a reality, almost to a degree of difference between running and crawling. In a crawling locomotion, in the context of inclusive finance, an incremental extension of the front ideally happens only when the rear has completely cleared the desired distance, else the inequity casts its shadows. Similar tenets can also be extended to the qualifying asset requirements of NBFC MFIs, which is set at 75% currently. As per a recent World Bank estimate, the progress in extreme poverty reduction has plateaued at a global level. It projects 7% of world's population to be below extreme poverty line even in 2030. It's an open question if we can reach an Indian ground zero on this front ahead of the rest of the world. On a side note, the registration exemption for not-for-profit companies engaged in microfinance activities below a threshold was meant in the interest of the financial inclusion rather than to be used as an arbitrage by some of the players. India has witnessed in the past the results of mission drift by section of MFIs who deviated from the core social mission to focus on their financial mission of creating value for the shareholders. While many of the microfinance lenders have dialed down extractive business model, it is far from being true case of stakeholders capitalism. The specious argument of no credit access versus high-cost credit access to justify higher pricing has lost its ground, and the industry must find ways to offer credit at affordable rates. Risk sharing through blended finance and switching to lean management techniques could hold some answers. The reported cases of unbecoming pricing or recovery conduct by some of the microfinance lenders make their way to grievance redressal systems, or even worse, to mass or social media. There clearly exists a trade-off between financial performance and outreach. That is the central purpose of MFIs. At an aggregate level, more than 12% of total microfinance borrowers had 4 or more active loan accounts in March 2024, with that going up to 18% in some states. This casts an onerous responsibility on the MFIs to ensure that they are not abetting over-indebtedness or participating in predatory lending. Financial literacy plays the role of a mediator and social capital as a moderator in the relationship between financial inclusion and a sustainable future. Access to and utilization of financial services are crucial long-term sustainability indicators by paving the way for societal advancements, the economy, and the environment. Hence, inclusive finance must be central to the climate response. Inclusive finance is a mature, low-risk, high-impact channel that climate funders should take advantage of. I am tempted to draw your attention to an ecosystem approach to microfinance and the concept of bottom-up pyramid 4.0, which was authored in 2018. In a knowledge era and with the rise of network society, the bottom-up pyramid is better or should better be known as the outer network society. Since the majority of society lives in the outer network, a new systems that connect these societies to resources that can help them develop socioeconomically and cognitively to be able to integrate to the global network society. Using industrial engineering principles and systems thinking, the researcher designed a product trains and upliftment model that helps resolve most of the structural issues with developing a sustainable sociopreneurial system. The model provides 3 core support structures: education, operation, and finance. The ecosystems framework approach considers not only competitors, suppliers, and customers, but also other actors and environmental factors crucial for survival and growth of organization. Cultivating such sociopreneurial activities in rural areas in India will have the side benefit of improving the farm productivity. To give wings to such an ecosystem by joining the outer network with global, probably the design concept of Internet, which was floated a few months ago globally, would be interesting and promising. Let me conclude. FinTech is the key driver for financial inclusion, which in turn underlies sustainable balanced development as embodied in the SDGs. Leveraging of digital financial infrastructure, making use of ongoing rise of open financial data demarginalization of the new to credit customers would address the twin issues of inclusive finance and sustainable developments of India, rising to become the 3rd largest economy. The focus of microfinance needs to shift squarely to developmental and multiplier impact of inclusive finance while managing the emerging and accelerating risks. Going forward, the journey requires the demand-side enablers for financial inclusion for furthering, deepening, and entrenching financial inclusion in the financial ecosystem. Financial inclusion in microfinance needs to go beyond provisioning of funding and services. I wish the conference some very impactful deliberations throughout the days. Thank you.
Thank you so much, sir, for sharing your thoughts with us. Thank you once again. Ladies and gentlemen, we have now reached to a very momentous moment as we move forward with the release of SIDBI-Sa-Dhan study report, Bridging the Gap. I would request all our dignitaries on the dais to kindly join us and release the report and mark a momentous beginning. Ladies and gentlemen, all our hard work, our thought, our vision, consolidated and put together in the report. We request you to kindly join us by celebrating this moment with a huge round of applause as our honorable dignitaries of the dais release the report, the SIDBI-Sa-Dhan study report, bridging the gap. We quickly capture it in our lenses and, of course, in our memories. Thank you so much, dignitaries, for doing the honors. May I now request CMD SIDBI, Mr. Manoj Mittal to kindly give the special address.
Before I start, I want to confirm from the participants, can you hear me well? Thank you. I was slightly worried, organizer Jiji Saab just told me that probably audience can hear you well, but we were not able to hear ourselves in the speakers there. So one way I was happy that I need not worry about what others are saying. I can repeat whatever I have to say. And on the other side, I was worried also that there is no point in saying if you're not able to listen. So thanks for confirming. Respected Secretary, sir, ED RBI, Mr. Das, Chairman NABARD, Mr. Shaji, Chairman Sa-Dhan, CEO Sa-Dhan, and dear participants, a very warm good morning to all of you. It's a matter of privilege for me to be a part of this august gathering here and actually contribute in setting the tone for the deliberation in next 2 days. As Mr. The Chairman Sa-Dhan has said, SIDBI and MFIs are inseparable, like Siamese twins. We have been there since, beginning, since incubation period, from NGOs to MFIs, transformation loans, into the formal companies, infusion of equity in large number of MFI, to be precise, 71 of you. And steering MFI sector in the time of crisis of 2010, creation of lenders forum, and propagation of responsible lending practices. There's so many things we have been doing together with the MFI sector. And after all these years, after 25 years of microfinance in SIDBI, when I see, it's very satisfying, it's very gratifying that MFI, now business is it's kind of a mainstreamed. It's part of the mudra loans, which gives a lot of legitimacy. And at the same time, now there is a regulation, there is a proper regulation coming. There's something, the regulator, RBI is there in that, in the thick of the action. And very importantly, the scale of operations. Now having touched roughly 4.5 lakh crore of outstanding with an average loan size of about 50,000. So when you look back, it feels like the microfinance industry has traveled a long distance. There would always be debates about, the utility of microfinance as a tool for economic development, and I take it very, very healthy thing to happen, because this keeps us on the alerts, this keeps us going for contributing and making a difference at the bottom of the pyramid, or as Mr. Das said, out of the network people. So at this juncture now, let me bring certain issues for your consideration, for deliberation in the next 2 days, today and tomorrow. We all want to be, the call right now here is from the Honorable PM, Viksit Bharat by 2047. And one of the major criteria in that, some country to be called a developed country is income, per capita income. And in that, how microfinance is going to contribute. So if per capita income is the target, so we need to keep the client in focus. So I would try to bring certain issues to your notice for consideration. One is about weighted average rate of interest being charged by MFI is about 24%. So in the last 10 years, we just compared some data. What we have seen is the policy rates have come down from the 8% sometimes in 2014, and OPEX of MFIs have also come down. But the question before is whether the corresponding decrease in these rates, in this cost, have been passed on to end beneficiaries or not. Maybe there is a need to look into different components. Maybe your borrowing costs are high. So maybe there is a need to look into every component of the cost to the end beneficiary. And let's work together to bring down the interest rates, because 24% in today's times, when the policy rates are so low, probably there is a need to have a relook on that. second point I would like to bring in, this is one of the cost component, and which is quite perplexing here, is the OPEX of MFIs over last 10 years has come down. It was 9.7% in 2014, and now it's 6.5% in 2024. But in the last 5 years, 2019, it was 6.7, and 2024, it's 6.5%. It has remained static in the last 5 years. With all these technological advancement, this technology at our disposal, India's tech, everything, why our OPEX is remaining static? There's something we need to have some introspection on this particular issue. At the same time, if this reduction in OPEX, which has come to over 6.5%, when I look into the reason for this, it appears to be coming out of the increase in loan outstanding per officer. Now an officer is doing more amount of the loan, and the figures are, it was 63,000 in 2014, 85,000 in 24. So there is an increase, substantial increase in 10 years. But the data says it was 1.05 lakh per officer in 2019. So what's the reason why there is a reduction in the last 5 years? And actually very startling fact is, one of the fact is, number of customers per field officer, which is a sign of productivity, has gone down by nearly 50% from 413 in 2014 to 233 in 2024. So number of customer which a loan officer can carry per field staff, that has gone down by 50%. And again, what's the reason? This looked quite odd to us when we tried to inquire about the reasons and all. We were told that probably it's on account of the reduction in number of members per center. So it is something, the figures right now is, now there are about 6 members on an average per center, which used to be 15 per center. So why this kind of a reduction in members per center? Why people are not coming forward? Why JLGs are getting smaller and smaller? So probably these are some of the questions we need to deliberate. These are some kind of tough questions, but I'm posing it before you. Whether JLG is losing its relevance, whether it's losing its sheen, whether it's a time, whether it's able to meet the aspirations of the people, whether the 50,000 loan, it's good enough for somebody, for a nano entrepreneur to make an impact, to take a scale. So I would suggest, I'm sure the deliberations will take place, and these factors also would be taken into considerations. We at SIDBI are committed towards this, and particularly all those budding entrepreneurs who are not happy with your 50,000 or 40,000 loan, and you are not willing to take those kind of risks. So I was not being heard, probably. So 50,000, that loan, if you want to take it higher, we have an offering. Prayas, the team, SIDBI team has got a stall here. Some of you who are interested can always talk about, and we can help you in meeting the aspiration of those people who want to have a higher amount of individual loan, rather just being a part of the JLG and restricting themselves with a smaller size of the loan. There are a few other issues like availability of data from some of the large MFIs to the SROs. When we see SROs report, there are always disclaimers in that X, Y, Z, A, B, C, MFI has not submitted the data. And generally it's on account of LODR issues, they are listed entities, and I understand that. But at the same time, I understand there is a session on the regulation piece. So within the frameworks of the different regulators, how fast, how timely we get the updated information, that's also a very important aspect for the industry, for the lenders, for all the stakeholders. So I'm sure that point also would be deliberated during the discussions. Then how do we get the information from all stakeholders, especially large MFIs who are important, who command a size in the market? It's important to get the kind of information for making an informed decision. SIDBI, as usual, would be happy to coordinate with various other lenders, stakeholders, as done in the past, and we would be reviving a joint lenders forum as well. And then we invite other lenders also to join and engage meaningful way with the other MFIs here. the report was just released through the hands of respected Secretary Sir. And I'm sure you would get a chance to go through this. This looks into the reasons for why certain areas underserved and why certain areas are having concentration. So maybe there would be certain learnings, and we look forward for your feedback. Sa-Dhan workshop is very timely. There are certain ripples in the market in the MFI sector. So I'm very sure this conference is going to deliberate on this issue, and at the end of the day too, we'll have some way forward, some certain areas to take forward. So once again,
years. I understand they are now entering the 26th year of its existence. 75 years of Indian independence and 25 years of Sa-Dhan. So now next what? That will be the question we need to answer as fast as we can, because we all know India is growing very fast, but then there are some sections of society which are not growing as fast as we desire. In this context, I remember one question asked to me by Honorable Minister of Cooperation regarding agriculture finance. He asked whether banks are adhering to the scale of finance while giving loans, because he was getting reports that certain entities are actually lending more than what is stipulated, and farmers or poor gullible people, because of availability of easy finance, they are becoming more of indebtedness. And drawing a parallel, recently Reserve Bank of India also has come down strictly on certain actions of microfinance institutions. So these two gel well, because now when we open up microfinance sector to market, I think there need to be proper systems and controls, proper regulations, and in fact, Government of India and Reserve Bank of India are taking effective steps to sensitize the players. Once we look back, NABARD started this microfinance activities way back in '88 as an action research project, which scaled up as an SHG bank linkage program in 1992. In fact, being an ecosystem player, with being a development finance institution, we were trying to set the pitch for others to come in. See, for a development finance institution, the primary motive is to actually wean away people from the dependence of the government to that of the market. And that is what development financial institutions are supposed to do. In that process, we develop an ecosystem where risks are reduced, and then the costs of providing services are also reduced, or the recovery of the cost can be improved. Either way, we can look at it. By doing that, I think we need to now target at the persons who are at the receiving end of our actions. That is which is important for any financial institution, more so for development financial institution. So now, at this juncture, right now, around 1.5 crore SHGs. If you multiply it by an average size of 10, it is around 15 crores. And you multiply it by, say, household of around 4 or 5, I think almost 45 to 50% of India's population is touched by SHG bank linkage program alone. And add to that the microfinance loans which we have given. Right now I understand that it's around 4.5 lakh crore is the outstanding under microfinance, and under SHG it is around 2.5 lakh crores. Sorry, 1.5 lakh crores. So that this put together is a substantial amount when you compare it with the income of the people which we are targeting. Now, Reserve Bank has come out with clear guidelines that how much, to what level we can indent a person. Of course, in our interest to improve our business, to improve the margins. See, we all started with a social motive, and slowly the social motive took backseat and financial motives came in because a lot of investors have come in. They saw that there is a profit to be reaped. And of course, understandably, because when market forces come in, they will look for not only not the impact, but the financial part of that more importantly. And in that context, now it is in our own interest that we need to now to be cautious. Stress is already building up in terms of over-indebtedness, and already regulator has taken note of that. And in this context, the sustainability aspect which we are telling, so if this aspect need to be sustainable, then I think we need to concentrate more on improving the income of the target beneficiary which we are aiming at. So right now, the 4.5 lakh crores, I understand around 16% is the growth of microfinance loans during the last year, which is slightly higher than the banking sector growth. So which itself shows that the easier access to finance is actually causing some sort of an indebtedness. But if it is not matched by improving the income, because now we have to concentrate on not only pushing credit, but also aspects of improving income so that repayment can be brought in, repayment can be ensured. So in that context, development financial institutions like NABARD and SIDBI will be helping out the market players. In fact, when you see about the impact aspect, the social impact aspect of that, so if social impact aspect has to be kept in the forefront, I think government entities also should be very active in that, because private entities, more importance will be for the financial impact rather than social impact, whatever we say about sustainability or ESG and such other things. So in that context now, Government of India is also taking a lot of steps. You might have heard that recently, within last 2 years, recapitalization of regional rural banks have happened. In fact, the Honorable Finance Minister is taking active interest in technology adoption by the regional rural banks. That is one aspect. And also the diversification of loans, because these regional rural banks so far were concentrating on agricultural loans. If you see the income composition of a rural household, only 1/3 of the rural household is now contributed by agriculture income. 2/3 is other income. Even the recently published NABARD Financial Inclusion Survey also corroborated that. But then one more aspect which we are now facing is that increasing indebtedness and reduced income. The per household income over a period, last 5 years, it is now coming down. But then the investment aspect is going up. So borrowing, of course, is happening. And by investment, NABARD means that investment in physical assets, including the consumption assets. But then there is more tendency for the rural households to invest in consumption goods rather than in the production goods. So that is one aspect now we need to concentrate on, because easier finance means they will be more splurging on consumption goods. And in the process, they will get more indebted because income is not increasing. Whereas we need to now consciously direct those desirability of investments into productive investments like a farm machinery or some sort of rural enterprises and some other aspects. So now the microfinance and the SHG movement should now go to, after 25 years of Sa-Dhan assistance, I think we should now concentrate more on enterprise development rather than focusing on consumption credit. Here, the enterprise development, that too women-led enterprises, that should be the aim, because almost 85% of the microfinance beneficiaries are women. In terms of SHG, if you see, almost 98% are women. Now, even the National Rural Livelihood Mission is also now focusing on the next level. See, so far they were concentrating on SHG, which is basically a consumption type of activity. Now they have moved to joint liability groups, and now they are graduating to individual enterprises. So by individual enterprises, we are actually focusing on improving the income so that the sustainability of the whatever outstanding is there, the chances of that those loans not going bad. See, if you see, three types of loans are there. One is that the agriculture, the KCC loans which are there, and then we have the SHG loans, and then the microfinance loans. These loans, though it is increasing by 16%, if you see that almost every year, most of the loans are getting topped up. So which beyond a point may not be sustainable. So actually now we should now look at the household, whatever loans they are getting, over a period of time it need to be amortized, or we need to track the income of that household to sustain higher level of credit. Unless we do that, that is where RBI also has come out with the income criteria, and then up to 50% of the income only should be used for repaying of the loans. All these aspects are there. But then there are data challenges, there are technology challenges to ensure that multiple borrowings, even consciously also, we are sometimes overlooking those aspects. So we need to now take a hard look of our portfolio, whether the sustainability of this portfolio, whether we can go on unbridled increase in the outstanding without looking at the sustainability. That is one thing which we need to. Even for agricultural loans, especially on the KCC loans, we are now worried about the health of that. Even larger banks have started taking haircuts prompted by RBI, because RBI was looking at smaller loans. Earlier, the asset quality review of banks happened where larger loans were focused on. Now, RBI is focusing on the smaller loans and stress getting built up, and they are actually consciously pressurizing, or rather advising larger banks to take haircuts on smaller loans wherever the outstandings are getting renewed every year. So some sort of that aspect, I think a hard look at our portfolio need to be there. And then we need to refocus for sustainability of this microfinance. We need to refocus on improving the income of the households. In that count, I said about the initiatives in the regional rural banking sector. Parallel to that, cooperative banking also is getting a fillip. Almost 13 crore members are there in the cooperative banks, cooperative institutions across the country. Now the government initiated movement of digitizing the cooperatives. In fact, the Honorable Minister for Corporation wants that cooperatives should actually support almost 40% of the rural GDP. The transactions which are happening in the rural areas should be captured through cooperatives. I said, if you want to concentrate on the social impact, then the government or quasi-government entities only will be having that role to play, because sovereign-backed entities only will have the wherewithal to do that. So in that context, the welfare we generate because of these activities should remain within the area where they operate, unlike a private enterprise which is coming in and then sucking out the welfare out of that area. We need to recycle the welfare within that area. That the SHG and JLG, the philosophy was that. Now we need to reinvent those things for micro enterprises. When we start numerous micro enterprises, we should be aware of the fact that they should not compete against each other. See, now the competition in the social sector should actually result in better terms of trade for the beneficiaries, rather than the other way around. But here, being smaller in size, each individual, this competition may create some sort of perverted incentives. So we need to be worried about those things. And I can assure you that NABARD will be there to support the microfinance sector. Now we are revamping our microfinance operations. Earlier, we were concentrating on SHGs and JLGs. Now we also understand that we need to graduate to micro enterprises, and in a larger way, where a group of people should come together and set up enterprises for improving the income. And then plus the initiatives in the cooperative sector, which we are now supporting, and the regional rural bank, where diversification of the asset portfolio is what the Honorable Finance Minister also was telling. Even in fact, she is taking regional reviews of regional rural banks. Already 2 such reviews are over, another 3 are scheduled. So why I am telling this is that the regional rural banks are the original microfinance institutions. If you see the parallel, right now the small finance banks which are there, the precursor of the small finance bank is the regional rural banks. Now the government is in the process of reinventing the regional rural banks, and that count I think the social aspect of microfinance will be re-emphasized by the government entities, and in that, I think the microfinance institutions, all of us should come together in supporting the equitable growth in the country. Right now, if we are not doing that, the rural-urban divide is now increasing. The one side of India is growing very fast, whereas the rural side is growing at sub 3%, which may not be sustainable in the long run. We need to now push those level of growth to at least 5 or 6 in the near term, or even beyond that, because numerous people, 60% of the population is dependent there. So I am here to rededicate the NABARD's efforts to the microfinance sector. In fact, we will be revamping our microfinance policy. We are partnering with Sa-Dhan in doing that. And also the microfinance report which we have released today will become the base for finding out the gaps in the policies, and then we will be moving forward in tandem with the government initiatives to take this sector forward. Wish the deliberations all the success. I hope that good recommendations will come. We will look forward to the outcome of these deliberations. Thank you.
Thank you so much, sir, for your valuable inputs. Ladies and gentlemen, a point that we all have been waiting for, to hear our Honorable Chief Guest. I take it as a huge honor as I get an opportunity to invite our Honorable Chief Guest, Secretary DFS, Ministry of Finance, Government of India, Shri M. Nagaraju, to kindly give the inaugural address. Ladies and gentlemen, with a huge round of applause as we invite our Honorable Chief Guest.
Good morning, ladies and gentlemen. Mr. Paul Thomas, Chair Sa-Dhan, Mr. K.V. Shaji, CMD NABARD, Mr. Manoj Mittal, CMD SIDBI, Mr. Jayant Kumar Das, ED RBI, Mrs. Jiji Mammen, ED Sa-Dhan, and distinguished friends. It's my honor to be present today, and also I'm grateful to the committee, Sa-Dhan committee, for inviting me to participate in this conference, which was aptly named for inclusive growth. For today's conference, I'm sure most of you are very distinguished participants with a lot of experience in the sector and worked all your lives. Many of you have worked all your lives. And I'm hopeful that at the end of the 2 days deliberations of the conference, you will have valuable suggestions and advice to the policy makers and also sector regulators, so that we'll be able to take forward the MFI sector much more deeply, much more inclusively in the country. You know, I have been exposed, I think many of you since don't know me in this, I've been exposed for a long time to the SIG movement in the country. Since earliest time I started my professional career. Since then I have seen how this journey has been transformative in reaching out to the unbanked, poor, unreachable areas, and also in the process contributing to the livelihoods, empowerment of women, and also responsible microfinance institutions at the ground level. The financial inclusion, I think all of you are aware, in the last 15-20 years has been one of the priority sectors for the government, to bring everyone who is not financially included, to bring every region, to bring every place to the financial inclusion, so that they will be able to access multiple products and get benefit of the financial sector. Still, there is a long way to go, but despite that, the journey has been very, very rewarding for everyone who is involved in the sector. Government of India has introduced several schemes to promote the financial inclusion and also to bring everybody into several schemes. insurance schemes, developmental schemes, credit to small enterprises through PMI, and then also Stand Up India, Jan Dhan Yojana. Recently, we have launched a few more. In this journey, the role played by microfinance players is highly laudable. I think it's completely recognized everywhere. India is the country with the largest number of MFIs, and we have done very credible work despite some black sheep in the market, but largely the sector has been robust and very credible. I think all of you know, the sector operates under two models. One is the NABARD model, and the other is the SSG bank linkage program. The other is joint liability group. NABARD, I have very fond memories. I think I have not told the chairman NABARD till now. I have, while we started the SSG groups for women in my first job, after that I stumbled upon NABARD. Somebody told me the NABARD is able to provide me some guidance. Then I worked, we used to have one district manager. Then I called him and then we worked together. And the way since then, I think everyone knows that NABARD is the pioneer for women SSG groups, bringing them to the credit linkage to the banks, bringing a lot of financial inclusion. And then, most of all, NABARD actually is crucial for governance structure of the SSG groups. They are the first guys, I remember, to, in fact, tell me the bookkeeping for SSG groups. And since then, it has now blossomed into a big thing. And we used to organize a large number of training programs for women SSG groups through NABARD. They were there. Now, NABARD has been partnering large number of government of India schemes, state government schemes to promote the SSG groups in the country. I think that they should continue to do that. And now I was told that under a bank SSG linkage program, there are more than 77 lakh SSG groups been credit linked with the 2.6 lakh crore outstanding loan book account, benefiting directly about 10 crore per households, most of whom are women, especially rural areas. Now, recently, the Government of India, the Honorable Prime Minister has been very keen on this, the Lakpati Didi program, to basically to further scale up the SSG, women SSG groups, so that we want to see the members of the SSG groups turned into entrepreneurs. Lakpati Didi program, it has been showing good results till now. Now, Sa-Dhan, I'm also told that Sa-Dhan has played an important role. They are actually partnering with 7 states to promote Lakpati Didi program. I actually thank Sa-Dhan and all your organizations for doing this. And I hope, I was also told that you have started already operations in 4 states, Assam, West Bengal, Jharkhand, and Chhattisgarh, which are the most backward regions of the country. Now, the joint liability group model is also actually playing an important role nowadays in the last, I think, few years, since we graduated from women SSG groups to joint liability group. They're also playing an important role with an outstanding loan amount of 4.4 lakh crore, benefiting about 8 crore per households. Now, I would like to combine together the role played by the microfinance institutions in providing access to finance and providing capacity building skills is completely, I think, I completely appreciate the role played by the microfinance institutions in the country. Now, both the sector models, now we have more than 7 lakh beneficiaries, 14 to 15 crore households. But I also hear what Mr. Jayant Kumar Das, ED, RBI, and also NABARD CMD mentioned just now about the stress that is slowly building up on the portfolios. I think we should all be careful on this. Any reckless or poor underwriting norms, if you keep lending to the SSG groups or joint lending groups, we are only harming the sector. I think we should remember that. Anything we do which will not strengthen their capacity to repay back or work out, we are actually harming them. So we should be very careful in what we learn, when we learn, how we learn. Because their financial literacy is limited, their capacity to understand is limited, their exposure to the outside world is limited. We should not capitalize on that. We should actually try to empower them, provide the needed finance, and also ensure handholding so that they actually flourish. Now, I have, as I said, let me tell you two examples I had with SHG groups working very closely. One is 90s, the other is early 2000. We used to have a program called to wean away the tribal population from shifting cultivation in Tripura. I happened to be the project director. The World Bank used to finance us. Now, the rubber, I think some of you may be knowing, the rubber, the harvest starts after 7 years. So 5 to 6 years is the plantation period. After 7th year, you start getting the rubber milk. Now, during that gestation period, what do families? Because the land is being used for plantation of the rubber. Now, we come up with a plan that we will develop livelihoods for the family through the women SHG groups. Then forming the SHG groups, we took a lot of time initially, forming the SHG groups with tribal women. Remember, tribal women, most of them are illiterate, uneducated, but of course they are very smart. They know how to run their families. We formed almost more than 30,000 SHG groups for a period of 4 years, for benefiting almost 45,000 hectares of rubber plantation we did. And now, 7, 8 years ago when I went back, I formed a long time ago, when I went back, of course, they are very flourishing. Most of the families are away from shifting cultivation, and then many of them have become entrepreneurs. And the socio-economic condition of the households dramatically changed. And wherever I went, people, they noted that. Now, the other thing which we did, I had, therefore I have very fond memories of women SHG groups. 2001 and 2002, we used to call total sanitation campaign in the country, so that every household should have a hygiene toilet and water. And one thing we did in my district, that we used to have difficulty in manufacturing the sanitary plates. Both the technology, transportation, and the responsibility is not there in most of the places. Because the amount that time given was 240 rupees per household to build up a toilet. So which is very, very, I think you can imagine 240 rupees for a household to build a toilet. With that we have to build. So to cut the cost, we formed SHG groups. Actually, we formed SHG groups in all my district. And then I have given the responsibility of manufacturing these sanitary plates to them, installing them, and also educating the families on how to use the toilets. Because the toilet use is also a big component of the entire sanitation program. And actually they have done wonderful work, and large number of villages and we call taluka, and all those areas, subdivisions, became completely open defecation free, and households have improved. Now we have several reports which indicated the multiple benefits the families have had because of the sanitation facility they got it. This was all completely led by the women SHG groups in my district. Now some of them, this time when I went, actually they are thriving in a different manner. They are taking up dairying, fishery, sericulture also. So there is huge potential if we recognize and handhold, guide the women SHG groups in the country. This is the message that I want to give to all of you today. Now, I'm also glad that Sa-Dhan has completed 25 years, and you have been handholding MFIs in the country, and you have been recognized as a SRO by the RBI. I hope you will continue to develop required policies to support and create required ecosystem for development of the MFIs in the country. Now, this year's topic is very relevant. I think all of us are experiencing about the climate change and the challenges of sustainable development. Especially India has been buffeted by several climate-related events all around the year. And therefore, we need to, the MFIs also need to build their inclusive development model, taking into account both climate change risk as well as the disaster events. Now, practicing sustainable development is very important, both for at an individual level and also at institutional level. I hope your deliberations will throw lessons to all of us. Now, I think MFIs, we all know that they are very close to the grassroots level and people. They are in contact with them, and they are best placed to drive the vision of Honorable Prime Minister for Viksit Bharat 2047. I hope you will be playing a leading role in that. Now, while talking, we just released a report, SIDBI report, annual survey on the task force report. I was going through that. Some of the recommendations are actually, we should take foot forward. One of the recommendations is promoting not-for-profit MFIs. That's one, I think. All of us are in the sector. I'm not in the sector as last 10, 15 years, but all of you are there. You are aware what I'm talking about it. I think we need to promote not-for-profit MFIs in the country. That's one. And then encouraging the MFIs to go to underserviced areas, so that they'll be able to bring large number of population into financial inclusion. And then partnering the government in promoting the government schemes, leveraging the government reach for effective implementation of the schemes, so that the benefits intended through the schemes are able to reach the beneficiaries. And then lastly, the other important recommendation they made, which I immensely like, is leveraging digital technology. We need to, I think large MFI need to develop their own apps to provide access and also to monitor their financial transactions, repayment, outstandings, all those things. Nowadays, with so much ecosystem in the country, developing an app doesn't cost much. I think large MFIs, I think we should encourage to leverage digital technology solutions, so that the transactions are less onerous on the MFIs, and they are always available, and they will be able to contribute to the development of the country. Now, I'm sure all of you are experienced, and you will be focusing your attention on the way forward. I once again wish the Sa-Dhan National Conference best of luck, and all the participants wish you best of luck. And thank you once again for inviting me to this inaugural session. Thank you so much.
Thank you so much, sir, for guiding us with your kind words. Thank you once again for those words of encouragement. August Assembly, we now move forward with a launch of Sa-Dhan, an Indian Institute of Banking and Finance certification course for aspiring and inspiring the new joinees of the Microfinance Institution. A launch of a course for those who are interested in joining the microfinance sector and get employed, and also for the new joinees who wish to get further groomed in the sector. But before we move to the launch, may I request Mr. Jiji Mammen to kindly say a few words about the course.
Thank you, Sushmita. Good morning to all. In fact, let me thank IIBF for joining hands with Sa-Dhan for developing a certification course for aspiring persons who wants to join microfinance sector. We know that HR is a major issue which microfinance institutions are facing, especially lack of adequate number of persons to be part of the microfinance workforce. One. Second is that there is a large turnover of persons also taking place in the sector. So we thought that there should be a kind of a pool we should develop so that the microfinance institution need not depend only on the resources available within the sector. You can also look at people from the outside, so they can be trained and made ready for joining the microfinance sector. That is how this whole idea of the certification course has been developed. Basically, what we think is that this course would be attended by, in the sense it's an online course, its certification course will be attended by the people who wants to join the sector. They can go through the course and get a certification. Also, the people who have just joined the sector, just joined the microfinance institution, they can also get themselves certified through this program. And thereby, they can become better resources for the institution, for the sector. That is what we are looking at. So I thank IIBF for taking this initiative, and that course will be now launched by the Honorable Secretary.
Thank you so much, sir, for introducing the course. And ladies and gentlemen, we proceed with the launch. And may I now invite CEO IIBF, Mr. Vishwaketan Das. Sir, may I invite you to kindly join us onto the stage, and may I request Honorable Secretary, sir, and Honorable dignitaries on the dais to kindly release the book and launch the course book. Ladies and gentlemen, this is a moment of huge pride for us. We request you to join us by putting your hands together in celebration. A course book being launched, a course book by Sa-Dhan, an Indian Institute of Banking and Finance, a certification course for all the aspiring and new joinees of Microfinance Institution. A course for those who wish to get employed in the sector, and also for the ones who want to get further groomed in the sector. Thank you so much, dignitaries, for doing the honors. As we now proceed towards the concluding moment of the inaugural session, may I once again request ED and CEO Sa-Dhan, Shri Jiji Mammen, to kindly propose the vote of thanks.
Dignitaries on the dais and off the dais, respected Secretary Sahab, Chairman NABARD, ED RBI Das Sahab, Sri Manoj Mittal ji, and Sri Paul Thomas, dear members of the Sa-Dhan board, and leaders from the industry, and my dear friends, ladies and gentlemen. In fact, we have come to the end of the inaugural session of this 19th Sa-Dhan National Conference on Inclusive Finance, Inclusive Growth, and with the theme of driving sustainable development through inclusive finance. I first of all thank everyone who have assembled here for this conference and making it such a grand one. My special thanks to Secretary Sahab, Secretary DFS, who has been kind enough to come and be part of this inaugural session and give his inaugural address. In fact, I would like to tell Secretary Sahab that the sector has been playing a major role as far as the inclusive growth is concerned. In fact, this has got the largest reach, I would say, to the most unreached areas, and thereby bringing people together and bringing under the financial inclusion fold. Also, as Secretary Sahab rightly said, that we are also a part of developing enterprises. In fact, Chairman NABARD also touched upon that. Developing enterprises is a kind of a next step towards growth. So we are teamed up with NRLM and SRLMs, especially for 7 states we are working with, and 4 we have already launched. So we are trying to support the SRLMs for developing micro enterprises through SHG members. We are also thankful to SIDBI for giving such kind of a support to Sa-Dhan. We are working in 2 states, especially Gujarat and Tamil Nadu, for developing micro enterprises from the women-led micro enterprises. So I thank Secretary Sahab for being here and giving his inaugural address and giving a lot of appreciation for the microfinance institutions. Thank you so much, sir. I thank Chairman NABARD, who has been always a support to Sa-Dhan and its activities. And for the conference, NABARD has been a constant supporter. They have been a conference partner for quite a long time. So I would like to thank Shaji Sahab and entire NABARD for supporting Sa-Dhan. Thank you very much, sir. Manoj Mittal ji, a close friend of mine, DMD, CMD, SIDBI, has been very kind enough to be here and give his address. And as Paul Thomas said, SIDBI has been always a part of microfinance movement right from the beginning. In fact, this conference, this national conference which we are having today, it was initiated by SIDBI way back in 2004. And thereafter it was handed over to Sa-Dhan for taking it forward. So it's always a part of Sa-Dhan and the microfinance industry and also this conference. So I thank Manoj ji for being here and giving your valuable guidance. Of course, ED, RBI, Dasha, he gave his views about the kind of things we need to do while we are taking forward the inclusive agenda. In fact, when I went to meet him and invite him for him, he was so passionate about the subject and he was talking very passionately, and he immediately readily accepted our invitation and he was kind enough to be here and give his address. Thank you very much, Dasha. Thank you, Paul Saab and the entire board of Sa-Dhan for guiding Sa-Dhan and the microfinance industry. And I thank everyone who have seated here to be part of this inaugural session. And I hope that, and also I thank our speakers and moderators who are already here. Some of them are already here, some of them will be joining tomorrow. Unfortunately, a couple of people have to drop out because of the weather-related issues. Basically, they have got some kind of a, I would say some weather-related sicknesses. But then otherwise, almost all the speakers would be here as given in the brochure. So I welcome all the speakers and moderators and thank them for their time. And I thank everyone being here. And I hope that today's deliberations will be as useful to every one of us and to the sector to have a new direction for all of us. Thank you very much.
Thank you so much, sir, for proposing the vote of thanks. Ladies and gentlemen, to express our heartfelt gratitude, we would like to felicitate our honorable dignitaries. May I request Mr. Paul Thomas to kindly present a shawl and a memento to our honorable secretary, sir, our honorable chief guest, Shri Nagaraju. Ladies and gentlemen, please join us as we thank our honorable dignitaries on the dais with a huge round of applause. Once again, requesting Shri Paul Thomas. Thank you so much, sir. Presenting a memento to Chairman NABARD, Shri K.V. Shaji. Once again requesting Mr. Paul Thomas to kindly present a shawl and a memento to Shri K.V. Shaji. Thank you so much, sir, for joining us this morning. May I now request Mr. Jiji Mammen to kindly present a shawl and a memento to CMD SIDBI, Mr. Manoj Mittal, and a memento. Once again requesting Mammen sir to kindly present a shawl and a memento to ED RBI, Shri Jayant Kumar Das. Ladies and gentlemen, this moment can become very energetic if we put our hands together and join together in this celebration. Thank you so much. May I request our dignitaries to kindly step forward for a group photograph. We captured this in our lenses and of course in our memories. Thank you, ladies and gentlemen. As we proceed with the concluding moment of the inaugural session, we would request you all to kindly join us for the networking break, but we request you to kindly join us back sharp at 11:20 as we would begin with our lead presentation, which will be followed by our plenary session. At any moment, please don't forget to carry your belongings. The organizing team will not be responsible for the same. We request you to kindly take care of your belongings. Ladies and gentlemen, for those who are interested in collecting the BMR report, you may collect the same from the Kalinga room, which is close to the convention center.